Good morning, everyone. And I guess it is Happy Hunger Action Day, hence why I'm wearing orange, and a lot of our Greater Nevadans on here are wearing orange. But thank you so much again for coming back and joining us on this recorded presentation. For now, I do ask that you turn off your camera and just place your mics on mute until the question and answer sections that we will have later on. Greater Nevada is finding a growing need for financial education from our community members. That's why each month we showcase a financial topic that we hope will help our community move towards financial well-being. After the webinar, you can prepare to receive information about some of the free materials and tools to help you keep moving on your financial journey. You can also check these out at gncu.org, or you can rewatch these webinars on our YouTube. My name is Sarai Helms, and I am the Financial Education Specialist here at Greater Nevada Credit Union. I am very happy to be your presenter today for the topic of taking control of credit card debt. It is definitely one of my favorite topics to talk about, is debt in general. A little bit about myself and I guess my GNCU journey. Some fun personal facts is I am a native Nevadan. I am a local Renoite here in Sparks, and I live with my cat, and I have a senior dog. I started my career with Greater Nevada in 2015 while I was studying to be an educator or a teacher. But over the last 8 years, my passion has blossomed to help motivate people and help people through their personal finance. Luckily and thankfully, because of GNCU, I've gotten and had the honors of continuing my education. And this year I did earn my National Credit Union Financial Counselor certifications, and I don't have any plans on stopping there. So let's go ahead and dive in, though. A little housekeeping. During the presentation, we will offer question and answer breaks. During these times, I will welcome you off of mute at this time, or you can turn on your camera if you're not shy. Please also feel free to type your questions through the chat feature, or if you want a more anonymous alternative, you can email your questions to our email that we'll be watching live during the presentation, and that is at GNCU financial acceleration at gncu.net, and we'll put that in the chat. Joining me to help support these question and answer sections are some of my teammates on here. I have Valerie Hahn with our business development team, as well as my community outreach manager, Michelle Hale. So let's go ahead and start diving into taking control of credit card debt. Bear with me here. I'm going to try to share my screen and my presentation. Let's get that pulled up. All right, here we are, taking control of credit card debt. So to start off, if I could just ask you a quick favor to take out that phone. I have mine right here. I'll do it with you guys. And just pull out that camera app and scan this QR code. This is going to pull up my financial well-being exploration survey. It's a couple quick questions to answer just to help me know, how am I doing? What do you want to learn? Is this helping? What do you need to learn more about? Typically, these topics are based on what is submitted in these surveys. Very non-invasive questions. The answers are, do you agree? Do you disagree? Do you strongly agree? Those type of answers. Okay. Diving in here, a couple things we will explore on the screen here, but the very last one, like I said, I promise to leave you with some tools and resources to help you continue your financial journey. Really, it's about taking into action. So, all right, we have some scary statistics coming up on the screen, and this is the reality of debt, and I kind of like to start here when we talk about debt. 70% of Americans are living in debt. 72% of us are reported feeling as though we live paycheck to paycheck. We, as in Americans, just reached the $1 trillion mark in credit card debt from the Federal Reserve. When you're here today, this may or may not make you feel better, but my goal is that hopefully it makes you feel less alone. But the average American holds $5,000 to $7,000 in credit card debt. Okay. When I have people come up to me and they go, I have 10 grand, I have 20 grand. Let us reassure you that we have seen the worst case scenarios. Okay. So again, all of this is not to scare you, but it's hopefully to let you feel less alone. The reality is that we have debt. And the reality is just knowing when you have tools to get out of that. Okay. So, looking at all of those statistics on that screen, on that last slide, it makes me think, is our debt in America or wherever, personally, increasing due to the convenience of just having the availability of financing, right? You can get a credit card from what feels like almost anywhere on any corner. So is that an increasing, or is it just the downright need? We are needing to put extra daily or our daily living expenses on our credit card to get by. Some quote that really hit me a while back was, I was asked, what do you think the main reason people report for an overdraft fee is? And I know we're not talking about overdraft today's, but hopefully this lets you feel more normal and hopefully take some guilt off of your shoulders when we go into this conversation of the main people or the main reason people reported getting an overdraft fee was, I thought maybe they needed financial education. And I was wrong. The main reason they reported getting overdraft fees was lack of income. Okay, so this is just reassuring you that we understand there is a growing need with high increase in costs going around and things like that, that maybe you feel like you're just putting those daily living expenses on your credit card. And we understand, okay? The one thing I'm not going to tell you is only use your credit card for needs and not wants. I think that is a general great idea to reduce debt and stay safe. Yes, is to only put your needs on there and your not wants, but right, we're also trying to not put our daily living expenses on our credit card. But I think the first thing I want you to do is, again, to take that guilt. I think that saying, only use your credit card for needs and not wants, can create guilt. What if you did use it for a want? I'm here to tell you that that's okay. If you want to put a vacation on your credit card, as long as you know a plan to pay that off, that's great. I'm here to say, first thing you should do right now before we go in talking about reducing our credit card debt is be thankful for those credit cards. Now, I know it might be hard to feel like that right now when you're in credit card debt, but the reality is it got us through maybe potential emergencies, right? And I have that on the top of the screen as one of the pros to having a credit card. You have access to emergencies. The other pro, maybe you've had the availability of fun wants that you haven't been able to get, that you've been able to pay off responsibly, hopefully, right? So hopefully taking that guilt off of that credit card debt. I do want to look at some of the pros and cons of having a credit card, right? It protects us against fraud. It gives us the opportunity to build our credit score. But it does have potential fees. If we don't handle it, could damage our credit score. Some people explain that it feels easier to spend because it doesn't feel like money. Okay, so hopefully, again, today is all about just re-putting in habits in place to when we get in debt, we can get out of debt. And we'll talk about this a little bit later on, but debt is normal. We will find ourselves at times in life when we need to ask to borrow money. And that is normal and that is okay. But hopefully we have a plan and give you some tools today that will help you get out of that. Okay. So yes, the start of debt, before you buy, I want you to think of the credit cards that we're specifically thinking today. Why did you come into this webinar today? Why are you buying? What did you put on that credit card? Did you use those cards for emergencies? Did you use it for expenses? Did you use it for wants and needs? Okay, so just think about that for a moment without guilt. And I want you to think about why and how you will be using it in the future. Okay, so maybe you do feel guilt in the past, but again, today is about moving forward. What? I want you to ask, what is the item you're even buying? What are the types of item you purchased? How long and how often are you using that item? Did you need that item right that moment? Could you have budget for it instead? And what type of monthly payment was on that item? And I really like to bring this up. When I put something on my credit card, just like I said, if you're putting a vacation on there, I should know that I want to pay X amount of dollars per month for X amount of time to pay that specific item off of my credit card. I use myself as an example. I put a couch on my credit card. And I knew that I needed to pay X amount of dollars. I wanted to pay off this couch in 4 months. But if I didn't calculate that and I just left that couch expense on my credit card and let it just combine into the total, I probably wouldn't have successfully been able to pay off that credit card in the time frame that I'd set for myself. So that's next. When? One, how long are you going to use it? When do you need this item? But how long will it take you to pay it back? Okay, we should be thinking about that before we put something on our credit card, want or need, okay? Phew, we're just diving in. Hopefully we're feeling okay. Do I have any questions so far?
No, it doesn't look like it right now.
Okay, great. Like I said, we will have some question and answer sections throughout this, but please feel free. Do not wait. If you have a question right then and there, type it in the chat and we will absolutely get to it to these or during these question and answer breaks. So, all right, let's go ahead and keep moving on. So 3 steps to manage debt. And first I want to say just by all of these are easier said than done. And I understand that, but let's go through them. So creating a spending plan. I know it is easier said than done, and it is probably almost annoying to have somebody say, well, you should have budgeted better. It's all down to your budget. I get that, and I don't want to focus on that today, but the fact of the matter is, if we are planning to repay our debt down, we are going to have to redo our budget because we want to see how fast we can pay this down, how much we can put towards our debt, okay? And that requires creating a new spending plan. Increased income, again, easier said than done, but I love to get creative with this, even personally. So if you have the alternative to work overtime or work additional at your job to increase your paycheck, that's fantastic. Now, I know not all of us have that flexibility. So for myself, this is one of my favorite ways is do not underestimate selling items, yard sale, gift shop. I guarantee there's probably a lot of things in your house that maybe you're not using anymore. Have you considered selling it rather than just donating it to get a little extra cash in your pocket? Even $20 is an extra $20 payment on your credit card that you don't have to make. Okay, so I've had a lot of success with this. Even especially now with our online availability of selling platforms or yard sale platforms online, such as like marketplaces and things like that, right? I really love this option, and I think it's easier probably more than ever to do. Okay, step 1, this should be step 1, not step 3, reduce debt, period, to stop creating debt. Stop that card usage or think about those 3 questions, what, why, when, before you use that card. We need to downright stop creating debt, right? Okay, again, easier said than done, but hopefully it gets you started. So where to start? I have credit card debt, or maybe I just have debt in general. These options will help with that as well. But I have 2 main themes for us today. One on the left-hand side, I have this cute little snowman waving to us, and he's waving goodbye to all your debt. So we have a snow theme, and then I have a beach theme. I talked about riding the waves of debt, and that's really what it is. We're going to catch that wave and ride it all the way down. And that is kind of the debt story of our lives. Again, I think having debt is normal. We have times when we need to borrow money, and that is normal and that is okay. But knowing how we can continue after that is the important part. So how do we start? We can make additional principal payments. This is an option we can do on our very own, okay? We'll get into detail on that. And then we're going to talk consolidation loan options. This is when maybe those principal payments aren't doing everything for you and you want to double down, okay? So let's start diving in. We're going to start with our snow theme. I'm not ready to think about winter yet, but this is just for the sake. So principal payments is when you're paying more than the minimum payment. This will accelerate and increase how quickly you can pay off your debt, but also probably helping you save money in the long run because you're paying less interest. So the two methods I want to talk about today when paying on principal or just doubling down on those payments, we have an avalanche method, pretty quick, and a snowball method. We're going to roll them up. Both of these are totally by your personal preference, what works for you, okay? And switch it up. So avalanche method is when you take your credit cards, or if you're talking general debt, you would take your general debt, and you're going to list them from the highest interest to the lowest interest. And that one at that top, that number one highest interest is our focus. We're going to focus on the highest interest again to make sure we're paying down money. And the avalanche method, I would say, makes the most sense mathematically. Mathematically, you will probably save more money by reducing the interest that you're paying with the avalanche method. Now, even though mathematically the avalanche may make the most sense, I personally really love the snowball method, okay? So again, neither of these are wrong, it's your personal preference. This is when we list our debts with the lowest or the highest and the lowest balances, right? We need to list them by balances. That number one at the top, we want to pick the one with the lowest balance to focus on. Let me tell you why. When we pay down our lowest balance, it gives me personally that win. I now have paid off a credit card. I'm celebrating. I'm excited to do it to the next one. So now that credit card's paid off, I can take that payment and move on to my next card, whether it's utilizing the avalanche or the snowball method. Okay, so I really like the small wins that come with the snowball method, but also know in the avalanche method that might be a longer run for you, right? It might be a longer goal for you. So you should really celebrate each additional payment you're making on that because each additional payment is worth celebrating. All right. I wanted to pause before we dive into consolidation options because I do get a lot of questions on those. Are there any questions? I think I saw some come up on maybe the snowball method or
The question
avalanche
was
method.
what you're getting ready to get into is what debt consolidation
You
companies.
got it. I knew that was going to be a lot of them. So yes, again, thank you for asking your questions. I will get to them. Please feel to interrupt me in the chat just to get it fresh out of your mind, and we will get to it. So, and again, if you still have questions after this, we'll give you resources on where to hopefully get those answered. Okay. Let's talk weighing debt consolidation options. There are different options for you, but I want to pause and just talk about the pros and the cons, or some positives and negatives, some things to think about when looking at a debt consolidation loan. So some positives, and the number one reason that switching to a consolidation loan works for people is right at the top. We are switching our revolving credit to installment credit. Let me use an example. People often describe credit card debt as it feels like a spiral that I can never get out. Why do I feel like it never gets better? I'm sorry to tell you, and it's not your fault, but I'm here to reassure you that it is the credit card. That is how they are set up. They are absolutely a revolving credit to make it feel that way. Now, not necessarily to make it feel that way. What it's there for is we always have that amount and we pay it off, and we always have that amount and we can pay it down, and we have that amount and we pay it down. And it is always there for safety and security, that cushion. Okay. But on the opposite side of that, that's why it can feel like that never ending spiral that you don't get out of. So when we switch to installment credit doesn't revolve, it doesn't circle around. Installment credit has a total amount that you're approved for, and you're paying it down until zero, until it's gone. Think of a car loan. Okay, so that is why a lot of people have success with consolidation. It's because we actually have an end date in sight. We have the same fixed interest rate amount and the same payment amount, the whole consolidation loan, which you don't necessarily get in a credit card payment. Okay. Now, some things to think about when getting a consolidation loan. What is the term? That means what is the length of the loan? How long is it going to take you to pay this off? Now, this can be a positive and a negative. We'll talk about that later, okay? But I do have it on the negative side, but it very much can be a positive. But I just think it can be a negative side when people go, oh my gosh, it's going to take me 5 years to pay off this debt. That is realistic because now we have a plan. Remember that that consolidation loan is giving you an in-date insight, which you've never had before with that credit card, okay? It can have fees to transfer over, so be careful with that. It is going to be a hard credit inquiry. So you could potentially see a decrease in your credit, but that's okay. We're going to work on building it back up, okay, during this debt consolidation process. Now, this is a big one that I talk about and probably the biggest tip or piece of advice I need people to think about when going into a consolidation loan. With a consolidation loan, you're getting approved for a loan, and through the logistics process, your financial institution's going to send out checks to pay off all those credit cards. Amazing. That's going to feel so good. But now what we've done is we have freed up that credit card. That has freed up a line for you to potentially add more debt. And I do see this happen where that person got that consolidation loan. But then now their credit cards are freed up and they just racked up another however much, right? But now they're paying that consolidation loan and right back in that spot of paying that credit card payment and potentially worse off than they were of not having a consolidation loan. So when you get a consolidation loan, it takes definite responsibility to know what, why, when am I putting this item on my credit card, okay? Oh, sorry, going slow. At the bottom here, I always put, you'll see this reoccur in the consolidation. Anytime you really get a loan, you should be asking, what is the interest rate I'm getting? Hopefully it's less than that credit card, okay? I almost guarantee it will be less. Monthly payment amount. What is that monthly payment amount? And what is the term or length of the loan? I saw a question pop up, should I close my credit card accounts? Thank you for asking that. One of my absolute favorite questions. We're going to get to that a little bit later on. But like I said, I promise if I do not get to your questions, I will have an option for you at the end. Okay, so let's talk about these consolidations options. I'm actually going to leave you with two today. One is an unsecured loan, a debt consolidation loan, a debt consolidation option, a personal loan. It has many names, but just know when you're getting a debt consolidation loan, it is typically under or classified as a personal loan. Okay, then we're going to talk about taking equity out. Equity is when you have a dollar value to something you own, such as a home or a vehicle. So this is an option that you can have if you are a home or vehicle owner. Okay, let's go ahead and dive in. I have some pros and cons listed in these positive, kind of negative parentheses, but right in the middle, I promise that both of these are going to probably save you money. As long as you're following them correctly and as long as you're not racking up debt on the end, right, or on the side. The reason these can help you save so much money and the reason that people lean towards these is right at the top. They have a lower interest rate compared to your credit cards, period. I'm almost going to guarantee that. And that's why we are switching, not only from switching to revolving to installment, but on top of that, lower interest rate. You can't beat it, okay? So let's look at that unsecured loan and kind of comparing these two. An unsecured loan or that personal loan, debt consolidation loan is going to have flexible terms for flexible amounts. Remember when I said that this can be a positive or a negative? It could be a negative because you're now putting a number on paying off that debt. Where it can be a positive is you have flexibility of how long and what you want that payment to be. So with your term or your length of loan, we can increase your length of loan to decrease your payment. If you need a more flexible and lower payment, we can, or you have the control of lengthening that loan out. If you want to pay it off more quickly and you can afford to do so, you have control of shortening that term length to pay it off more quickly. So I think flexible term and flexible payment can be a positive because you have control over how much you can afford, which you did not have that flexibility with your credit card, right? Okay. On the unsecured loan side, we have the positive factor of I can have flexible payment amounts. And this is in juxtaposition to the equity out, where the amount on which you get for debt consolidation, which you're approved for, specifically depends on the amount of equity you have. Okay. Whereas an unsecured loan, it is not depending on nearly pretty much anything other than what you're approved for, right? At the end, too, that equity out, this is only kind of a negative, is it's only an option for people who own homes or own vehicles. Basically, what we would do is, what is that home or vehicle worth today if you were to sell it today? But what I'm going to pretend to do with a vehicle is pretend to sell it right back to you. So you're actually going to get a vehicle loan interest rate, which is probably even better than the unsecured or personal loan interest rate. Some of the downfalls are we are technically refinancing that vehicle, so you will have to have full coverage insurance, but hopefully the adjustment in the monthly payment, you're still saving even with adding that full coverage insurance. Okay, that was quite a lot. Let's go ahead and pause. I did see that one of should I close my credit card? And I promise we'll get to that in a little bit. We're going to get to that in step 3 when we talk about maintaining or rebuilding our credit during this process. And closing or not closing your accounts is a key component of that. Okay, so let's go ahead and move on for now. Let's talk, oh gosh, I get a lot of questions on this one, and I highly encourage to ask questions. Those credit card transfer offers, which write kind of another debt consolidation type loan option. With this one, pros and cons to it as well. Number one thing you need to be thinking about, what is that interest rate? We're going to spend a lot of time on that one. What's your monthly amount going to be? Can you afford it? And what is that rate or length of loan? So this is specific to credit card offers. This is when, let me give you an example. I get an offer in the mail for a 0% interest rate for X amount of months. What they're saying is I would like you to refinance or transfer your debt over to the 0%. It sounds very appetizing. 0% almost sounds like you can't beat it, right? But there are stipulations where I want you to absolutely focus on the rate and the length of the loan on this. That 0% can be easy to fixate on, but really what is the most important is that rate and length of loan that they're offering. If they're offering you 0% interest for 24 months and you transfer that over, the risk is if you do not pay that in the 24 months, you're not getting 0% interest, or they're not just charging you the interest on what you haven't paid back. They typically will charge you interest, that high interest, for that whole 24 months on your whole entire balance. This is where people can end up in a worse situation by doing a credit card transfer option than if they weren't. If you do not, again, I cannot stress that enough, if you do not pay off that 0% balance in that amount of time, typically these offers in the fine print will say, then we're going to charge you the maximum amount of interest rate, whatever that is, on the whole entire balance that you transferred over. To me, that makes sense. I'm only offering you this deal if you can make this deal, this 0% interest happen in this amount of time. So again, know your interest rate. What is it going to go to if you don't pay it off? Can that monthly payment amount, or is that monthly payment amount going to work for you still if you transfer it all over? Okay. And that rate or that length of loan, is it realistic for you to pay off in that amount of time? And what's your payment going to be? Okay. A couple things I wanted to mention that I don't think I did. Sorry, I know I'm going backwards. on, actually, I think I'll get to it later. I guess I just wanted to mention, no, I'll mention it now because I'm assuming that it may come up in questions, or there's at least one person with this question. Something I didn't mention before we start finishing up our consolidation loan options, with the unsecured loan option, something I didn't talk about, that flexible amount. I get a lot of questions about, let me give you an example here. Let's just say I have $10,000 total in credit card debts over a number of credit cards. What if I don't get approved for the full $10,000 on an unsecured loan? What do I do? Okay, so for that situation, totally normal, totally okay if you're not getting approved for that full amount. Still going to help you again. Remember that it's a lower interest rate and you're finally going to have an end in sight. At that point, if you don't get approved for that full amount, we need to prioritize your debts. And to me, the most important are that maybe we should pay off with that consolidation loan are the loans or the credit cards with your highest interest rate. Can we get those off of your back? Put that in the consolidation loan for the highest interest rate to save you money. Now, is the one with the highest payment amount a better option for you to finance? Okay, so just something to think about. If you do not get approved for that full quote, this flexible amount here, prioritize your debts and your credit cards and think about, use that snowball and avalanche method by listing your debts from highest balance to lowest balance, highest interest to lowest interest. Okay, so sorry, don't mean to go backwards, but I did want to pause on there because I do get a lot of questions, and it is absolutely a valid question of what if I don't get approved for the full amount? What should I do? Okay. Phew, sorry, I went backwards, but I'm going to pause at this question break. Let me see if anything came through on debt consolidation loans. Okay, couple questions I have. How do I control my credit card spending after I get a consolidation loan? Oh, okay, let's pause here. This definitely is appropriate here. And then the next one, should I close my credit cards? Yes, I will get to you in a second. So that one, how do I control my credit card spending after I get a consolidation loan? Like I said, the biggest risk is that we are freeing up your credit cards now. And I think for you to control your spending, downright comes to your responsibility. Okay, you reforming your habits for positive. The biggest thing I can think of is give you, again, when you slide that, number one tip should be don't slide that credit card. We're trying to reduce debt, trying to not use it is step one. Step two, ask yourself, what is it I'm buying? Why am I buying it? How long do I need it? Right? Those what, why, when questions. Is it for an emergency? Or is it a daily living expense? Is it a want or is it a need? If it is a want, can we budget for it later rather than putting our credit card? This is a lot of us struggle with impulsive buying because it is so readily available today. So, right, we need to remorph those habits just to know my goal right now, the treat that I am giving to myself right now is paying off my credit card debt and not doing more. So I hope that helps. It is all relative to you. I guess I have some tips of pick only one thing that you put on your credit card. Maybe it's only gas. Maybe it's only groceries. I have a credit card where I have a revolving balance that I work on continuously paying off. And then I have a credit card where no matter what, I cannot go over this limit because I have made the commitment to pay it off in full no matter what every month. I suggest setting that type of goal if that works for you. Maybe you separate your credit cards to this is only for emergencies. This is only for one vacation a year. This is only for one tires every 2 years. You set limits to yourself. So I hope that helped answer that question. But yeah, it definitely comes down to blocking out all those impulses that we want. Okay, so one of the big things when we are consolidating debt, I think there's a common misconception that you're, oh, I leave my credit cards at home. Yes. Okay. I am going to friendly argue with you that says, but I have my card saved on my phone, but I have my card number memorized. If that works for you of leaving it at home, I had people that did that old school trick of they physically freeze it in a block of ice. But I also, we're going to talk about maintaining credit right now. And that may not using your credit card may not be the best option to maintain your credit. I know that sounds crazy probably when we're talking about debt consolidation, but let's get into why. Again, I think it's a common misconception that people think your credit may tank during debt consolidation. And this is something that we didn't bring up, but there are companies that you can pay to do your debt consolidation for you. I didn't spend a lot of time on these debt consolidation companies, but I think it is appropriate to talk about before we dive into credit, because typically what they're doing is they're closing a lot of your old debts, and that can potentially lower your credit. Maybe that is where the misconception of paying down your debt is going to lower your credit. Like we said, we may see temporary decreases if we're doing things and we're changing up our credit a bit, but hopefully these next few slides will help you understand why, and hopefully give you the confidence of it is not going to be a permanent drop, okay? We will hopefully shoot right back up. So I don't like to spend a lot of time on this, and I just left it on the screen, but these are the 5 C's of credit: capacity, character, capital, collateral, conditions. I think those are pretty heavy banking terminology, but I do like to put it up here to go, yes, the 5 C's exist in the financial world or in the creditor world. Yes, we talk about them. Yes, you may hear them. Here is what they are. What I like to look at more is, what is our credit weighted by? So here we have 38% is payment history. The heaviest weight on your credit is if you're making your payments on time. Okay, so to make sure we're increasing or maintaining our credit during this, it could be as easy as just making sure we're making our payments on time. So if we are, let's say we're using that snowball or avalanche method, we still need to be, even though we focused on that credit card, let's say with the highest balance, okay, or the highest interest rate, excuse me, maybe we're focusing on that one. We still need to be absolutely making at least the minimum payment on our other cards to make sure we're not affecting our payment history, okay? Amounts owed. This, during debt consolidation, you can see some challenges with, specifically those credit card increases or offers. If I have a 0% interest for that 24 months or whatever it may be, and I'm transferring all of my debt on there, they've basically essentially given you, let's say, a credit card for 10 grand. You've put 10 grand on it and you've maxed that out. Something to think about if you are doing one of those credit card transfer balances. Is it going to max out your amounts owed or your DTI, your utilization? If so, that could potentially cause a decrease in your credit. Again, not permanent, right? We're going to work on it. Okay. Length of history. How long have you been friends with that creditor? Again, at the very beginning of this, I said, thank that credit card. They have gotten you through a lot. So answering your question here, should I close my credit card accounts? May sound crazy, but the first thing I'm going to tell you is probably to not close those credit card accounts. They should be maintained. Now, we don't want to close them because think of them, I like to think of credit as a friendship. That is your longest reference. They have your back. They can speak for all of your positive history, okay? So to close that off, you no longer have that reference letter, and that can potentially hurt you. Now, on the opposite or juxtaposition of keeping credit cards open, that doesn't necessarily mean you shouldn't use them. I said everything's a balance. We need to maintain them. I did say yes, it frees up if you do a consolidation loan, it's freeing up those lines of credit, but that doesn't mean necessarily you should stop using them. What these creditors want to know is, are you still doing okay? Or do we still have a good relationship? If you're not talking to them and not using your credit card at all, they don't know that. And you could potentially see a decrease because of that, because you're minimizing that communication between that friendship. Okay. 7% is new credit. Like I talked about, it is a hard inquiry when you go in for that loan consolidation application, but hopefully it's temporary. By building credit or paying down your debt, by the end of it, as long as we're having positive payments and things like that, we should see an overall probably increase. I would say, I wouldn't be surprised to say that if you do everything positively, your credit will probably be even higher than where you were started. That was just my personal experience, I will say. Okay, so 5% types of credit. So proving your trustworthiness, right? That's that revolving versus installment credit. If you've never had an installment loan, such as a car loan, and you've only had credit cards, maybe that is going to bring more challenges to getting approved for that consolidation loan. Not to scare you, but it just means you haven't had it yet. So this is the first type of loan you're having in that way. Do we need to do anything to make you successful? Okay, so that is all that I guess I have to say about that. It's just we're weighing that revolving and installment credit. Okay, this is just another look at how that credit is weighed, but I'm going to leave you with a couple tips. So payment history, again, do not make a late payment. It can stay on your credit report for 7 years, potential 30 to 70 point drop, okay? Keep your utilization low. There's this 30% kind of rule. Keep your utilization for your overall total credit limit under 30% and keep each card right under 30%. So again, if you have that high utilization going to one of those credit card offers, you may see a potential decrease, not permanent. That question, to close or not to close. Hopefully we know by now that keeping it open and maintaining it can probably help maintain our credit more. New credit, how often are you borrowing? I love this question. We should not be asking to borrow from a friend for money very often, right? Hopefully we're not, and this is the same look as creditors, is if we have an established savings account before, we shouldn't have to be asking for borrowing for money. So our credit applications should be few and far between. I should also mention during this debt consolidation process, probably opening a new credit card isn't in your best interest, okay? I would like to know why you think that is going to benefit you. Not saying that it won't, but I would like to know why. Okay, and types of credit. Build and diversify your credit. It's potential if you are one of those people that has never had a installment type loan and this is your first one, you may be building and diversifying your credit right now, and maybe that'll even help you. So that's great. I promise we are finishing up and we're getting to the last question slides. Again, a couple tips to maintain your credit during this debt consolidation process. Couple actions to improve your credit, couple actions that could potentially lower your credit. Again, not permanent. I don't want you to feel as though you're being punished for debt consolidation by your credit going down. What is happening, let me go backwards, is this wheel, we're changing during our debt consolidation. And this is going to give different history to our creditors, and they're now reevaluating, but we're constantly reevaluating. So again, not permanent. Okay, you guys, we have made it to the very end. I hope you're feeling more confident on, can you handle debt consolidation by yourself by taking just on principal payments? Absolutely an option you can do by yourself. If you want a little bit more help or just to expedite the process, hopefully you have some pros and cons and can start weighing out if a consolidation loan is good for you. If so, which type of consolidation loan is the best for you? Okay. So let's go ahead and move on. Your financial journey should not stop here. Again, thank you. Here is that second reminder. If you could please take out your phone, answer these quick 5 to 6 questions. Hopefully I helped you learn a little something today, and hopefully that reflects in the survey. But also let me know, what other topics are you wanting to learn? We base these financial webinars based on what our community is telling us that they need most. So again, another benefit to filling that out. Thank you so much. Again, don't stop here. If you want to watch this webinar again or share it with a friend, it is recorded and I will be posting it on our Greater Nevada YouTube at a later date. But again, another QR code for you. If you want or are curious about debt consolidation, we have free financial tools and resources for you. No membership needed. So you can actually go through on our left-hand side. There's free financial coaching through Greater Nevada, and it's offered in other languages. Maybe you don't want coaching, but you want to learn something new. We have podcasts, videos, calculators, debt consolidation calculators. Really encourage you to browse in this. Again, I said that a lot of this comes down to our responsibility and taking initiative to make this our goal. So taking financial well-being into your own hands is definitely needed, important, right? I can say that I benefit from it as well. So I will be here. We have about 15 minutes. I am absolutely open for open Q&A, but I will just say, number one, thank you so much for everybody that attended this webinar again. We will be hosting these monthly, so I look forward to seeing you on the next one. And two, congratulate yourself. Give yourself a pat on the back right now for even being here, for taking that step towards being financially free for your financial well-being. You've already made the step. Just don't stop now. So thank you guys again. I will stay here to answer any Q&A, but I know a lot of you have to get back to your morning jobs, and I will let you head out early if you need to. But happy Friday. Happy Hunger Action Day in September. We're promoting wearing orange. You can promote it as well or donate to your local food bank. Okay, I got a question. Do you offer personal debt consultations? Now, yes, we do. Let me go ahead and go back. On this screen, this free financial coaching over here, we partner with our group called Balance. Balance is a group of certified financial counselors, such as myself, that can walk you through all different kinds of counseling, debt counseling, credit counseling, budget counseling, home counseling, all kinds. I recommend start there. Okay, see what they can offer. Then I would recommend, if there's still answers, we have a lot of resources on our website. Again, come in. You can talk with any of our Greater Nevadans at any point. But also, I will leave, thank you, Michelle, you put that credit counseling. I will be sending out an email after this with tools and resources, including my contact information. So afterwards, if you've gone through all of these financial tools, you've met with Balance and had that financial coaching session, and you still need help, totally okay. I am here for you. You will have my email and my phone number in that resources email. Absolutely feel free. I'm happy to chat with you on the side if need be. Okay. All right. Anything else, guys? Anything that I missed? I'm going, I love debt talk, I should say. I don't love debt. I love talking about debt. I think there's a common misconception that maybe we don't go through it ourselves, but there is, that is today's day. Like I said, debt is normal, and there are times when we will need to borrow money. And that is okay. And I hope you can get guilt-free out of that. And hopefully, again, that this webinar just gave you those tools and resources, the competence and confidence to maybe tackle your credit card debt on your own. All right, but I think that is it. So I will let you get back to your early Friday morning. Have a great day, everybody.